Okay, so we have a very rare Saturday stream, Saturday vlog, because let me delete this here. I haven't done this in a really long time, so I figured I'd take a look at it. It's been a few months since I've actually done this kind of a performance analysis. Last I did it, I checked, was end of February. So we have all of March, which was a very low activity month for me because I went on vacation, and we have um, uh, lower activity months for March and April and May. A lot of it is part of it is the vacation, part of it is the um, event project that had me tied up for work that happened and is over with and done with in the past as of May 5th, and then some post stuff and the following week after that. But overall, it's a decent sample size of how to trade less while being busy and still have. Well, we'll see what the success rate is. I mean, my account balance is pretty good, so I want to say it's pretty good. My performance is pretty good, but we don't really know until we take a look here. And all I've done so far is copy pasted the values from the dashboard into Google Sheets so that we could do just some basic analytics on it. Um, so I'm just highlighting from March 1st. So let's see how many. Uh, okay, so it's going to count the number of rows. So I want to count just. Let me just highlight this row because it's hard to see it without that. Fill color. Say orange. Okay, so let's just start from there. That's my row one. So started off with a win. How many trades did I take since March 1st? 66 trades since March 1st. That's interesting. I wonder if how many trading days since March 1st, 2023. I wonder if this works. I wonder if ChatGPT can just tell me something like that. Trading days have there been since March 1st? Okay. Yeah. Do we not have any holidays? 55 trading days? Approximately. Okay. That was just a little distraction there. That I squirreled. Okay. I was gonna base it off of calendar days, but that's not exactly the right math. Anyway, what I was trying to get at was let's pretend it's 50 days. Um, that means I've taken 66 trades in 50 days. So that's less than that's a little bit more than one trade per day. So let me do bring up my calculator here. Um, 66 trades in, let's say, 50 trading days is like 1.3 trades per day. So anywhere like very like one and let's just say 1.5 trades per day. So every 3 days I would take two trades, which is very different. It's a stark contrast from the previous, I guess, 3 months. Let's see. 68 trades in just a matter from January, just in 1 month, right? Basically, because what I'm showing here is January 23rd to February 27th, which is a little bit more than 1 month. Um, and I have more trades between January 27th to January 23rd to February 27th, approximately 1 month, and than I have in the past 2.5 months. So there's the discrepancy in how much fewer trades that I'm taking, and the fact that my if you were to sum it up, I mean, Google Sheets is doing it. Uh, Taking 68 trades here yielded $8.68. This isn't obviously the entire account, right? Because my account goes back to December, November of last year, so that's not the whole thing. But just what we're showing here in terms of that time frame, it's not exactly apples to apples, but it's close enough of an approximation because you have the same 60 something trade sample size, whereas with this sample size of 66 trades, it's 481. Okay, so same number of trades spread across time um, is a huge difference. So this could also be inflated. I might have just caught a little bit of a lucky streak, but I don't think that, based on the book that I read, Trading in the Zone by Mark Douglas, which I think is one of the best trading psychology books ever. He has said that if you can be consistent in your execution and not introduce other variables, which I believe I've done, um, then a sample size of 20 to 25 trades should be sufficient to determine whether or not whatever it is that you're doing is worth doing more of or if it needs to change. I did triple that sample size. So in both cases, I didn't mean to. I just kept doing what I was doing, and then every few months I pop on here and do a self analysis of my own performance. I love that trade. This is one of the reasons you got to trade with a prop firm. I believe with very loose rules that fit your trading style is like they'll do the tracking and trade journaling for you. Like there's all these videos that I've seen about pro trading tips and stuff like that, and a lot of them point to, hey, you gotta track what you do. And now a lot of the best traders that I know track every single thing that they do, but they do it manually. They do it on pen and paper. They have their own Excel spreadsheet. They have their own very complex document with formulas and all this tracking software that integrate. It can get very complicated, but I don't think it needs to get that complicated. It could be as simple as, hey, trade someone else's money, and more than likely any prop firm that you're trading is gonna give you the full transaction, the full trade history, and you copy paste that into Excel. And if you just know how to do some basic Excel work or Google Sheets work, uh, you know, trade journaling can be really easy. My biggest thing against trade journaling was I couldn't be consistent with it. I tried to be consistent with it, but it was just, I found it so tedious that it put me in a worse mental state than not doing. But I knew than not doing it, which affected my trading, I believe, right? And if you're frustrated, if you're like, if you're feeling like you're aggravated for having to do something you really don't want to be doing, that is not necessarily the best state to be trading in. So I never liked trade journaling, even though I value the data. So I love this because the data is just given to me, for like, I forget how much it was to apply for this challenge, but for the price of the challenge, you get access to a practice account essentially, to show your skills, and a free trade journal, in my opinion. No one markets it that way, but because no one really is trying to improve the trading psychology of the trader, they just care about you paying the application fee and hopefully failing. That's ultimately that's how they make money. So they're hoping that you fail. They're not going to give you all these tools that matter. they'll give you all the tools and things that don't matter that much. But the stuff that's actually going to make a difference, I don't know. You know, they're gonna the stuff that you have to work on internally, like trading psychology, working on yourself. Like this is all stuff that is you can't do this as a group. You can't analyze your own account in like a group setting kind of thing. Like everyone either has to have a coach that does it with them privately, one on one, or you have to do it yourself, and you have to hopefully have the discipline to be able to do it yourself. So anyway, so that's my quick little rant about like the value in doing this kind of thing. It extends so far beyond passing the challenge and gaining access to funding, and it extends so much further beyond that on a psychological level. Anyway, rant over. All right. So what are we looking at here? So I'm looking at 66 trades. My win rate is let's determine my win rate. So from 1 to here is 66. And I have how many green boxes do I have? How many green fields? 1, 2, 3, 4, 5, 6, 7, 8. I'm not going to count that one. 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18 wins. So I'm not counting this one, because this is definitely one where I move the stop up to a break-even kind of thing, and to me this is a break-even trade. This is also probably a break-even trade. This is a break-even trade. This is a break-even trade, because the break-even trades aren't gonna, because of the slippage, it's not gonna ever be completely zero. So it's gonna like the closest it's gonna get is something like this. But this one I probably did a little front running or something here. For it to have gained that much in profit. Usually this is, $1, 36 cents, 26 cents. This is what makes more sense for a break even. 24 cents over here. Okay, so I'm not counting that. I counted 18 wins. 18 wins out of 66. Whoops. If I can type in this properly. Is a 27% win rate, which is not even that good. What was it before? Jeez. That is not good. How did I profit so much? Okay, this is a trail stop win, or win for less. Did I count that correctly? 1, 2, 3, 4, 5, 6, 7. Skip this. 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18. 18 wins. Jeez, that's a lot lower than I thought. Okay, what was it before? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. I don't know if I want to count these. 15, 16. I'm not understanding how I have almost the same win rate, but my profit is so different. Huh. Am I losing less? That is very interesting. I'm very surprised at that percentage. Why is it that my account is so much better, but the size and the win rate is virtually the same? Mystery. Okay, let's figure this out. One. I doing 66 rows? 70 to 35 is 66 rows. That's correct. I know this is correct because if you have a 30% or a one third or 25%, excuse me, if you win one quarter of the time, uh, with my win rate, it would be you would get you would profit 0.33. Um, I would approximately be averaging $10 profit, something like that. But with the slippage and stuff, it's going to be a little lower. So I get this part. So this number makes sense to me. That my average win, if you were to do the math, that it's like I'm making $7.29 per trade that I take. So that part makes sense to me. I'm not that happy with it. I want that to be kind of, where do I want that to be? I want it to be closer. I want it to be closer to double this. Definitely in the double figures with the slippage and stuff. So this part I'm not that happy with, but slow growth is better than no growth. It's better than it being negative. So I'll take it, but I'm definitely not satisfied with it. I'm just um, I'm pleased with my progress, but this is definitely nowhere near my target. Uh, the most I lost was a $50 trade. That makes sense. I traded bigger um, for bigger moves. Um, Gave it a shot, but didn't work out. I still want to do it. I still believe in it. It's just I am not accustomed to looking for these trades, so the 50 doesn't um, surprise me. If any of these had worked out, then this would be like 200 or 250. But none of the big ones worked out, so that's actually working against me. So if I had not done that move at all, this should have been 30 minus 30 plus 100 ish. Okay, so but I'm puzzled as to how we have so much of a win rate. Okay, let me take it like this. The previous 60 something, the average is 13 cents. Why is it 13 cents? When my min and max, my min was actually better here, and my max is actually is the same number of trades. I'm so puzzled. One win, two, three. So I'm not gonna not count these wins because they're not full wins. They're 1-to-1s. So you have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 wins. I guess that makes more sense. 14 wins. I'm 4 wins short from 18, and that's $400 because each win is $100. I think I mistakenly counted these just because they were green and not. Yeah, that makes a little bit more sense. Okay, okay. So it's just a handful of wins actually accounts for a huge discrepancy. Um, I'm just thinking like it could. it just shows that you could easily get lucky and measure from a day from a start and end point where you're both endpoints from when the date that you're the start date that you're measuring and the end date that you're measuring, if they're both really lucky days, this data could easily be skewed. 66 trades is not enough to do what I'm doing, especially when just a matter of 4 wins can account for such a huge discrepancy. So, so if I'm doing, so 14 plus 18 is 32. So 32 wins out of 134 rows. 32 out of 134 is right, yeah, around 23.8%. So my win rate is still it has improved, but not by as much as I thought. um, what the takeaway here is that even though you can have your win percentage doesn't have to your win percentage is what's the best way to say this? First of all, the sample size is too small, such that one transaction can make such a huge difference, and the trade win. The fact that the win is so much bigger than the loss means that the win percentage isn't really the the best determinant for success, because a few percentage points could mean a world of difference. Like, really what this means, the better way to describe what's happening here is from the first half to the second half, the first 60 something to the next 66 something was a difference of 4 trades. And that's kind of crazy, because there are so many other trades that I know that I missed that were winners just because of poor execution, just because I wasn't looking at the market early enough, or I didn't get up early enough, so I was having a rushed start to the morning, and I didn't really prioritize looking at the charts, or like I didn't look at it at the end of the day. There's so many missed opportunities that at the time of trading, I was like, that's okay. There's always the next trade. But looking at this now, I don't know if this is good for my psychology or bad for my psychology. I don't know. But looking at this now, it's like the impact of one winning trade is so much greater, and I underestimated it. So it just reemphasizes that I can't miss any of the opportunities. And if I had, I think my win rate would definitely be much higher if my execution was just higher. I think a lot of my execution still mentally comes from, originates from a place of like FOMO, like shit. Oh, I just missed that one. I gotta take the next one. I gotta not miss the next one, and it's not as bad as revenge trading per se, which is something I used to do really really badly, but this is something that is somewhat similar, but hopefully in a healthier way. Um, yeah, that's the takeaway. That's the lesson for today. Is like the impact of one trade is enormous. One winning trade is enormous. I think I have my trading volume pretty good across 2.5 months, in terms of how much or how little I'm trading per day. But this is like maybe a little bit of an overcorrection, and I need to do a little bit more, trade a tiny bit more, especially. Well, I need in order to trade a tiny bit more, I need to be much clearer about the rules of entry, because that's the linchpin that will keep the balance between, okay, don't miss any opportunities, but don't overtrade. So the rules have to be crystal clear. They've gotten clearer in my mind. I can already feel that they've gotten clearer, and I'm better about that now. But there's still more room to go. And wow, this is I'm surprised. I knew I was gonna find something. I always do. Whenever you look at your own data, your own performance, whenever you look at yourself on film, or whenever you look at yourself on from look at a recording of yourself doing something, some kind of project or performance from years ago, there's always something that you notice about yourself that you didn't at the time of performing. And that's why these things are valuable. But this is not what I expected. So okay, so this is going forward more. Ironically enough, trade more, but more meticulously, more volume, and a lot more uh, meticulousness and thoroughness. Got it. All right. We'll see. We'll resume Monday.